Hey everybody, Dave here, Hidden Freedom. In this video, we're going to go through all of my stock portfolios, look at the dividends and all of the positions I'm in. It's been a while since I've done a video like this, kind of documenting where all of these accounts are. The markets have been in a major rumble the last several months here, and the portfolio's down pretty good, but the dividends are holding up. So that's what we're going to go through in this video. So let's not waste any time. Let's go ahead and get started. So we're just looking at the overview of all my accounts here. Now there is a couple accounts that are not shown here, but we will still go through those accounts as well. Just today we're down $6,700. I think yesterday was down, I think it was like $35,000 yesterday. It was a big down day, and the market's down near the low at this point. But look at this here. I mean, the whole portfolio at this point's down to $38,000, almost $39,000. And just a few months ago, it was up like 50. So, we've already shed about $100,000. And that's just the way things go. You just kind of get through and bite your tongue and just not open up your portfolio and look at every day. Try to invest as much as possible during these times. Obviously not go all in at the same time. Kind of dollar cost average your way in. If you got a boatload of capital sitting around, so I got $207,000 over here, we're going to actually look at that account and see what I'm actually doing with that as well. I talked about it last week, but there's been a little bit of changes there. So all of the portfolios sit at this time 1.14. That's including the cash. Okay, so right now we have total invested of $918,000, and that's not talking about the options account here. So let's just go through that one real quick first. So here is the options account right here, and right now this is what I'm invested in the options account. I do have a little bit of Amazon there, 9 shares of Amazon. I did have Google in there. I had 5 shares of Google. I did sell that out earlier. I think it might have been last week or maybe earlier this week. Just took a little bit of profits there in Google. If it drops, maybe I'll get back into another 5 shares in preparation for that split. Amazon already got torched in that, down 10% in that. So yesterday was actually up quite a bit, but let's see, or it might have been the day before. And then I got some QQQ here, 260 puts that expire here in next month. And then I got some SPY puts here. I got a 345, got 2 of those, and I got some 350s there. I got 3 of those at 350. Those expire July 1st. So what I've been doing here, anybody that knows, most of the options that I've been doing over the years have been mostly the Qs. It used to be the TQQQ, and now it's the Qs. And then I've kind of dropped doing the Qs just lately, and I'm going into SPY just because, and the reason why I'm doing that is just because I'm I think I'm overexposed to the Qs, right? I already have this whole account right here, this Schwab Solo 401k, which we'll look at here. And this Schwab Solo 401k, which is this account right here, so we'll just scroll down here. I'm invested in 246 shares of QQQ. I'm down 19% in those alone, so down 17K just in those Qs. So that's part of the reason why I switched out of the Qs and started doing SPY there, because I just feel like I had too much exposure to the Qs. So there's almost, 80-something thousand, almost $90,000 of Qs exposure there. And I'm continue to invest in the Qs every single month as well. I put about $1,000 into that to average it down. My cost basis right now is $359. But, I don't want to be overexposed, and that would just, be overexpose me to the Qs. So that's why I kind of switched out of doing the Qs. For the SPY puts there. So that's kind of what's going on in the options account there. Let's go to the options report real quick here. And I did take some losses there this month already, down $5,600 this month. And that was just me getting out of those Qs instead of rolling them and then getting into the SPY. So right now I have $1,400, almost $1,500 of premium baking. Notational value is $226,000. So I still have about another, I don't know, 4 to 6 more puts I could put on without really going overboard in that account. The Netflix sits at like 290, so I can go above that, especially if I get down to like the 320 area on the SPY. I do think 350 is a good number for the SPY target, but 320 could be it could be an option as well. So I'll probably start trying to put some spies on if we have another leg down, a little bit lower than the 350 mark there. So that'll bring the notational value up and then bring the premium up. And then when I go hike the Appalachian Trail, I won't have to worry about it. So the goal is to at least be flat on this account this year. And that's pretty good considering, you know, we're already down 28% on the NASDAQ, and that's what I was mostly trading, was the NASDAQ. So I feel like I've done a pretty good job of keeping that account up. You know, if I lost 30% of $300,000, that's a lot of money I would have lost. I'd be down significantly in that account right now if I was invested all in the Qs instead of the puts that I was in. Instead, I'm only down $8,000 on the year. So that's not that bad. I can, you know, do $2,000 per month here and still end flat on the year. So that's, you know, just the way it goes, you know. I mean, you don't know that you're going to have a big decline like that in the market. So it is what it is. All right. The next thing we're going to look at here is we'll look at the other account here. Let's see here. We got the Schwab brokerage account. That's my main account that I'm kind of living off of, although I'm living off of cash right now. We living off the cash and for the almost probably entire rest of this year. So this $22,000 on cash right here I'll be living off of while I'm hiking the Appalachian Trail. And so this account here produces about $39,000 in dividends. That is all being dripped with the exception of NUSI. So looking here at that account, all of these individual stocks here. So we got we got Starbucks and all these other, you know, quality names here that I'm in. So NUSI here, the drip is turned off, and that is just because I'm using the funds from the NUSI that pays out every month to actually fund my HSA for the rest of the year at least. And then so we got QQQ, which is only in one account there. That is actually in the Solar 401k. We got Devo, JEPI. That's the heavy lifting for the dividend portfolio there. Generates $34,000. Actually, that's not correct because we need to scroll over to the brokerage. I'm invested in JEPI in a couple different accounts. So for my main brokerage account, we're generating $19,800 in dividends there, $12,000 from Devo, and then, like I said, the NUSI is the only account that's in there, and that's just to generate the capital to put in the HSA every month, which is $230 something odd dollars the rest of the year per month. SCHD, I'm starting to build out there, so we got $32,000 in SCHD there. And these are the amounts that I'm down right now. So JEPI, I'm down 6%, almost 6.8%. We got Devo, I'm down 4.2%. We got NUSI, I'm down 12%. NUSI hasn't held up very well, but if you noticed, I'd say the last 3 weeks or so, it's held up very well. It's either been flat or even green on the day, and that's because the puts are in the money, and they've been in the money for quite some time. So it's going to be interesting to see what Nationwide does when they stick the new set on, because I think that set expires this Friday. By the time you see this video, they probably already have the new set on. So it'll be interesting to see if they go with closer in the money or if they actually go with, you know, another 10% down or something like that. Okay, what else we got here? We looked at the Solar 401k already. That's just in the Qs. We looked at the Schwab brokerage here. Let's just look at the Schwab IRA account there because that's a new account. Basically rolled that 401k money over to it. So here is the Schwab IRA here. I do have one placeholder here in the SPY. I just have one share. That's just a placeholder right now. And then I also have roughly about $183,000 in my cost basis there invested in a JEPI. I talked about that in last week's video. I'm already down 2.77% in it, but that's fine. That's just the way it goes. It is a little bit less than what the market should be down, but this should generate still about $15,000 of dividends. So going over to Schwab, just look at that account there so we can see the rest of it. So we're looking at my Schwab account here. This is that account that we're talking about. This is the IRA, which had the 401k that I rolled over. And I invested most of it, not most of it, $180 something thousand into JEPI there. So there's JEPI. This kind of jives what we have in here in Google Sheets. Down 2.77%. We're down 2.77% there. We got that one share of SPY. And then I also opened some new SPY puts here. So I got one at 355, I got one at 360, and I got three at 365. In last week's video, I talked about, spreading that out a little bit, and I had 6 365s on. Well, guess what? The market came up big on that Friday, and I bought those back on Monday. It was able to basically make $1,000 on those puts. And then when the market dropped later this week, I basically put on these 5 puts right here. And there's enough capital in this account, I think, to stick on another put. So if we basically do another leg down on SPY, I'll probably open like a 350 or a 345 or somewhere around there to take up the rest of the amount of capital that I have available. And that's just the way I'm playing SPY, to get a discount on it. I know some people were a little questioning why I did it this way. And well, I mean, if I was invested in SPY just from the get-go, or even SCHD from the get-go, I'd be down big right now on this account, right? So this is just the way to make a little bit of income from JEPI up here and play the volatility. Also get a discount on SPY as well. If these get assigned, then that's fine. I can turn around and sell covered calls, assuming the market doesn't drop too far. And that was what the plan was to do with a Sol 401k as well, right? I was doing covered calls against the Qs here, but it's just down too far now. We're down at like below 300 at this point, and my average is 359. So the covered call, the wheel strategy just didn't work very well. But it is what it is. I'm only down 19%, even though the Qs are down almost 30%. So, I mean, I did get a little bit of a discount, but that account's pretty much useless at this point, and only generates $450 annually in income, in dividend income. So that is the reason why I'm playing a little bit more safer in this account here. I mean, I think down at 350, if I can have about a 350 average, I think I'm pretty good there. Even if basically SPY drops to 320, I still think that I can make money on the covered call side down there if I can bring the average down a little bit more. So that's the plan with that account there. And then that just brings us to, if you're interested in the spreadsheets featured in this video, there is a discount code currently going on. It's HF Fire 2022, kind of celebration of my early retirement. So they're available here on the website, which the link will be in the first pinned comment, and I'll put the discount code down there as well. So we got the HSA Fidelity account here, which is about $16,600 in there. And that is 100% invested into XYLD. So we'll just scroll over here. And so here is the Fidelity account here, XYLD. We got 377 shares there. I'm investing into that account every single month as well, about $230 per month, and that'll all go into XYLD, and then it also drips into XYLD as well. So that generates $1,683 per year. So a little over, what is that, $140 per month? That's pretty darn good. If I can get that up to be about $500 to $600, I do have plans to build that account to $100,000 to $150,000 by the time I start collecting Medicare, which I think is at 62. So that's the plan, is to get that account to $100,000 to $150,000, and that's the only reason why I'm invested into XYLD. I'm not a fan of YLDs, but I think XYLD has held up. It's earned its place in the portfolio, and the only main reason why I did is because I know what the return's going to be, right? And I can kind of predict how quick that account will grow. It should double in roughly a little over 7 years, assuming the market doesn't drop too far. And I'm going to be basically contributing to it as well. So it's going to double in less than 7 years. I'm going to contribute to it as well. And that's the only reason I did that. If you go into SHD, you kind of have to just, okay, I'm going to get about, 8% per year or something like that. Well, that's not guaranteed, right? Not that this is guaranteed either, but at least I can kind of map that out, right? It should be getting roughly about 9%, 10%, somewhere around there, and I can kind of gauge it off of that, right? And this is great if the market's going sideways or it's going down, and I can continue to drip into that, and then that'll explode when the market comes back up. Obviously, it will underperform SPY, it'll underperform SCHD or anything like that, but At least I have an idea of where that account will be by the time I'm 62 years old, and that's the plan, right? Is to roughly generate $150,000 in there where I can actually pay for my entire deductible, plus I can pay for my entire premiums. That's the goal anyway. So let's just talk about the M1 Finance account here real quick. All right, we're logged in my M1 Finance account here, and I'm invested in two things here. I know I made a mistake a week or two ago when I said I got out of RYLD. What I meant to say was I just screwed up. I got out of QQQM in this account and then just kind of split that across BST and across RYLD. So I do own RYLD still and BST still in this account, and we're down pretty big in BST, and we're down somewhat okay in RYLD. But so I do continue to invest in this account. It's not a lot. It's $50 to $100 a month. And it's my mega growth account, but it's really not. It's just the Hidden Freedom Schoolie Fund. And so that's what's in this account here. And let me scroll over to the actual yield real quick here, because you can always pause the video. I'll scroll up here and I'll kind of scroll down, so you can pause the video if you want, but here is all the yields on cost for every one of the positions, and then the current yield there. All right, so let me scroll down a little bit there. So there you go. That's basically in this portfolio. It's in this video. It's all been tracked at this point, so you can pause the video. I'm not going to go through every one of these yields here. If it's red, it just means that my yield on cost is lower than what the current yield is. That's all that means. And then these over here, these income ETFs, are kind of just a projection, because those kind of change every single payout, especially if the stock goes down. Okay, all right, I want to kind of just have this, snapshotted, right? I'm down $38,000 at this point. I was up, I don't know, over $100,000 more than what I'm showing in here at this point just a few months ago. So the market's pulled back significantly. I'm just going to talk about that, I mean, I'm not immune to it. Nobody on the internet's immune to that either, unless you're sitting in cash, which you're only losing 8% a year on that, but I'm not different from anybody else. I'm not immune to it either. And the best you can do is continue to try to be a little defensive, and especially if you have a short time frame. I'm already retired. I retired 34 days ago at this point, and retirement's been great so far. So I'm about ready to go hike the Appalachian Trail here. So I'll be posting videos over here on my second channel, Hidden Off Grid, over here. I'll be posting pretty much a video daily over here. Pretty much this is where I'll be posting the video, so I appreciate it if you support this channel here, Hidden Off Grid. The link will be down in the first pinned comment as well. All right, everybody, I will make another video for next week as well, kind of talking about what my plans are and all that, but hope you enjoyed this video, and we'll see you in the next one. See you again.